Home delistings surge as sellers struggle to get their price. This isn't good. They're trying to sell. No one's willing to pay the price. The realtor comes and says, let's take it off because it shows that it's been for sale for 328 days, and let's start it all over again. Here's what CNBC had to say about it. Go for it, Rob.
Housing market, but this year could be worse than expected as sellers seem to be giving up. Diana Olick joins us to explain why. Diana.
Hey, Mike. Yeah, when a seller takes their home off the market, it's called a delisting, and they're now happening at an unusually high rate. Delistings in October, which are reported with a one-month lag, were up 45.5% year-to-date and up nearly 38% from October of last year. That, according to a new report from Realtor.com. Now, this is the highest delisting year since they began tracking in 2022. Delistings began to rise in June and have remained elevated for 5 straight months. About 6% of active listings have been coming off the market each month, which is typically something you only see in the dead of winter. All right, so why is it happening? Uncertainty in the economy, stagnant and high mortgage rates, and of course, a still pricey market. Locally, Miami, Denver, and Houston are seeing the highest ratio of delistings compared with new listings. Those are also markets that saw some of the biggest price gains in recent years. And in addition, and because of that, more potential buyers are now heading to what Realtor.com calls refuge markets, more affordable markets. Grand Rapids, St. Louis, Cleveland, Milwaukee, and Pittsburgh are all seeing much bigger price gains now than the rest of the country because demand there is suddenly surging. Now, later today, we do get earnings from luxury home builder Toll Brothers. We haven't had any government data on the home builders since before the shutdown, but Toll has been outperforming simply because its buyers are less reliant on mortgage rates. Now, they did guide to lower home deliveries. We'll see how much lower when we get those results this afternoon.
Okay, Tom, what's going on here?
What's going on is they said delistings, this is the highest it's been since they started measuring it. What happens with delistings, when people finally decide to sell, they're usually selling into a roll-up market. They're seeing prices roll up around them. They're seeing prices go up. Honey, maybe it's time to, sell the house and buy something smaller, or maybe now's the time to, move across town to something bigger. Well, what happens with delistings? Delistings is what happens. Delistings increase, which tells the market observers that the peak of the market prices in the current point may be upon us, Pat. When prices peak, delistings happen. What it says is that guess what? There's now prices may be starting to go down a bit. So number one, you see, are we seeing the delistings as a signal we may be at the top of market and prices are now going to moderate, go down a little bit? And remember, these prices have run up for a while, so it's not like these are going to drop below mortgage value like the great financial crash in 2008, 2009. So, but this is a sign. Now, what do we also see? 2 weird stats. Number one, the layoffs have increased over the summer. From July to now, layoffs have increased, but job openings have also increased, which might mean that we don't have the people in the right places or the right skills for the right jobs because you have layoffs on one hand and then you have job openings on the other. But this, I believe, is a sign that in these peak markets, we're about to see pricing start going down. Because I put it up saying, hey, honey, it was $1 million. Let's put up at $1,050,000, see if we get any takers, because things have been up around us. But what if the real market for your house is really $975,000 right now? Because it's peaked a little bit. Well, then the realtor says, look, we don't want to go drop, because people will price under you. They'll think maybe you have to move somewhere for a job, and there's some psychology in buying. Let's just do this. Take a breather, and then we'll put it back out at $980 and go get your $975. There's strategy to it as well.
Dan, what feedback do you have to say for people that are not homeowners or homeowners? To homeowners, do I sell or do I keep? 2, if I want to buy, is this a good time to buy? Do I wait? What do I do?
If the house is a house that you're living in as opposed to an investment, if it's an investment, I think the market's going to go lower. So, I mean, depending on, can you be without a home or without a real estate piece of property, without a fourplex, et cetera, I'd sell. But if it's your house, I just write out the market. I mean, your home, I just write out the market.
The common sense.
Yeah.
You want a house, family, somewhere to live in, you're going to be there long-term, 5-10 years, just go buy, do your thing. Okay, Adam. Your thoughts on this?
Yeah, of course. Is it a lifestyle thing? Is it an investment thing? Or is it something for your family? Those are 3 different things. I've said this before. I'll say it again. The best investment you can make is into yourself, is into your business. Then assets like the stock market or Bitcoin, and then housing. You know, housing is a lifestyle thing. Yes, if you wait it out 5-10 years, you can make money on your house. Of course, nobody's denying that. But is it the best investment? In my opinion, no. And for the matter for young people, it's taking longer and longer and longer for all of life's milestones. Buying a house, having kids, getting married, it's all taking almost 10 years longer than it was a generation ago. The average home buyer right now is 40 years old. You know, a generation ago, the average home buyer was 28. So things are taking longer. Good things take time. Play the long game.
Brandon.
Yeah, we gotta stop acting like the owning a home is the number one asset for somebody in their life. Like it's like a retirement vehicle or it's like their end all be all. Because like it would be good for the most people if the home prices went down. Like that is what should happen if we build more houses. So you know, people are acting like it's gonna be a national crisis if home prices go down because that like psychology's been built in. But that's like a bad way to think about it.
Yeah, I think there are certain markets that are going to be impacted more. Certain markets are not. I suggest looking, if you're comfortable moving, look into red cities, red states, pro-business, pro-friendly, no income tax, a place that you know others are going to move to. If it's in places that is blue state, the other day I saw a clip of Gavin Newsom with Charlie Kirk, and he talked about how, hey, we have, and then Charlie kept saying, we got the fifth largest economy in the world. And then Newsom says, I'm glad you know that. He says, but you've been losing a lot of people. He says, not last year. We got people coming in. He says, but the way you got people coming in last year was some illegal immigration. And Newsom was stuck. He didn't know what to say. So if you take blue states, people are leaving a lot of these blue state, high regulation, slow speed on permits, and they're going to low regulation, red state with no taxes. Position yourself better where you know people are going to go there. Not only a place to raise your kids, not only a place where business is going to be attracted to go. If you go there, you know people are going to keep going there next 5, 10, 15, 20 years. And guess what supply and demand says? You're going to be fine with the property you buy. When we set out to create a shoe that blends comfort, function, and luxury, we had the choice to make it fast. We had the choice to make it cheap. We chose neither. Instead, we chose Tuscany, Italy. We chose true Italian craftsmanship, each pair touched by 50 skilled hands. We chose patience, spending 2 years perfecting every detail, and we chose the finest quality at every step. Introducing the Future Looks Bright collection. Not rushed, not disposable, not ordinary. Rather, intentional, luxurious, timeless. If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.